So financial accounting standards essentially is a set of standards which define like a basis on which transactions are accounted for, and the basis on which financial statements are presented, and the related disclosures and information that go with that set of statements to make that set of meaningful set of statements for any user to understand. So I think there are some of the basic requirements for it. One, to be relevant, to give a fair presentation, to be meaningful information to the readers. So a set of financial standards tells you how to account for a transaction, what relate disclosures to provide in relation to the transaction, and what all information ultimately needs to be put together. So in substance, the financial report, or at least a set of financial statements, typically includes what's called a balance sheet, which is effectively a statement of financial position of the company. There's a statement of income, which is like a profit and loss account, states how you performed during that period. There's a statement of cash flows, which shows how you've generated cash flows from various sources. And lastly, there's a statement of changes in equity, which shows what is the net equity increase or decrease during that period, including from owner sources and non-owner sources, etc. So the set of financial standards, or financial reporting standards, as they're now more broadly called as, effectively give you guidance in terms of how companies consistently put together these reports from period to period. So the end result of a good quality set of financial statements is it brings in more comparability and I think consistency in the reporting from period to period and across companies. IFRS essentially refers to the International Financial Reporting Standards. Now, I think with globalization over the last couple of decades specifically, I think the world has been trying to move towards using one financial reporting language, one language that's understood by investors, analysts, users across the world. Because today we operate with different gaps. In India, you have Indian GAAP. In US, you have US GAAP. In Europe, let's say there's IFRS. In Japan, there's Japanese GAAP. Now, all of these gaps are different, so a user of a financial report can never truly understand the financial report of another country. But with increased global investors and I think exchange of information on a global basis, there needs to be that one financial reporting language. Now, over the past, specifically over the last about 5-7 years, especially post 2005, IFRS has truly kind of emerged as that single reporting language that's now being used globally. Today, there are about 150 countries that are, I think, either using or on the verge of using IFRS within the next couple of years, which essentially means that practically most economies of relevance are moving towards IFRS, including the US. Of course, the US is still not given a committed roadmap by when they will move to IFRS, but indications are that if they ultimately go through, it will be by 2015 onwards. Other significant economies, including Japan, they're moving in by 2015. India, Brazil, Canada, all of them kind of announced roadmaps to move in from 2011 onwards. So that way, if you look at it, China has already converged with IFRS, and so most geographies which are relevant in today's economic perspective are already using or moving towards IFRS. So it will effectively be that one single language that is used for financial reporting across the world, and I think that's the relevance of IFRS. And India, with its emerging role in G20 and in the global economy, had obviously was in a way compelled to make this change. It couldn't stay isolated or out of this bandwagon for long, because with the amount of foreign inflows that we have into the Indian capital markets, SEBI was always under pressure from IOSCO, which is the International Securities Regulator, to move to IFRS reporting for Indian listed companies. Similarly, the government of India had made a commitment at the G20 summit to essentially move India towards a global financial reporting language. So it is imperative that India moves, and it's unavoidable. And I think some of what we've been hearing recently in India is towards that end. Indian GAAP has largely been modeled on the international accounting standards in its earlier avatar, and so over the years the Indian standards have always been adapted or adopted from the international version. But unfortunately, the Indian standards haven't kept pace with the level of change that's been happening globally, and as a result, there are a lot of gaps that are there in Indian GAAP in terms of accounting for some of the more complex transactions, etc. So, in a way, what IFRS does, or the convergence with IFRS does, is in a way fill some of those gaps. And the gaps relate to, let's say, accounting for mergers and acquisitions, or accounting for these complex financial instruments, derivatives, and so on, or let's say accounting for the stock-based compensation, the stock options, and things like that. So these are some of the areas where there is new guidance that is coming into Indian GAAP with the let's say the convergence with IFRS. Now, the process that India has adopted, like for most countries of these 150 odd countries that I mentioned, most of them that are moving towards IFRS have either gone with an adoption route or a convergence route. An adoption means effectively you just leave your home gap behind and you take on these standards issued by the International Accounting Standards Board as your kind of gap going forward, and that's a process of adoption. Whereas what India has done is a process of convergence, saying that we will develop our Indian accounting standards on the lines of the IFRS standards, such that there is no deviation, or that we are broadly in compliance with the same set of standards. That ultimately, if you apply Indian GAAP, you will get the same results as applying IFRS. So that's the process of convergence. But in India, because of the socio-economic environment that we have here and the various other domestic compulsions, etc., there are a lot of deviations that have been considered in this process of convergence to make the standards more relevant from an Indian perspective. And a lot of this has been, in a way, a result of the lobbying done by Indian companies, and some of them are genuine reflections of the economic reality in the Indian context as compared to the international context in which those standards might have been originally written. So India is, as a part of this process of convergence, has now gone and kind of published about 35 standards which are kind of converged with IFRS, and of course stating what are the specific deviations that they've made from those international standards. Yeah, the Ministry of Company Affairs or Corporate Affairs had come out with the roadmap way back in Jan 2010. As per that roadmap, for companies other than banks and insurance companies, all the other companies were to move in a three-phase roadmap. The first set of companies being the larger entities, that's the Nifty, Sensex, and companies with a net worth more than 1,000 crores, and also those with securities listed overseas. So all of those companies were supposed to move in from 1st of April 2011, which is like a month and a half from now. And so that was the first phase, which was about 600 companies. Then companies with a turnover, not a turnover, with net worth between 500 to 1,000 crores were supposed to move in the second phase, which was from 1st of April 2013, after a 2-year gap. And the remaining listed companies were to move in 2014, that's 1st of April 2014. And the only companies that would have been exempt would have been unlisted companies with net worth below 500 crores. And there was also a similar roadmap released for the financial services sector. So for insurance companies, they were to move in from 1st of April 2012, and for banks between 1st of April 2013 and 1st of April 2014, they were to move in 2 phases. But unfortunately, post the release of that roadmap, a lot of the other developments to make this a reality have not really happened as per the originally expected timetable, which includes amendments to the Companies Act, the existing Companies Act, as well as, I think, kind of mirroring some of these requirements into the new Companies Bill as well, because that's also likely to become a reality quite soon. So the Companies Act related changes, there were changes required to the Schedule 14, changes required to the Schedule 6 of the existing Companies Act. There were also changes required in the taxation law to kind of recognize that there is now a new set of accounting framework, and how that the results of that accounting framework reconcile back to the taxation requirements of the taxable income, etc. So all of those changes haven't happened, and accordingly, Indian companies have been quite nervous about how to go ahead with this transition without clarity on all of these aspects. So as a result, I think over the last 3-4 months, there's been a lot of noise made by Indian companies saying that now the time seems quite short. And in the meantime, what's happened is, post the economic crisis, there's also been a lot more of change that is being envisaged in the international standards itself, and they are working with the US standard setters to try and amend some of these standards and jointly develop some of the new standards, etc. So a lot of IFRS standards are also parallelly undergoing change. So there was a lot of nervousness from Indian companies saying that when IFRS itself is changing, and when all the other countries, the large countries including US, Japan, etc., are giving their companies more time to make the shift, why are Indian companies being forced to do it from 1st of April 2011, and especially in a time frame when we are not ready from a regulatory perspective and from a tax perspective, etc. So considering all this, there's been a consultation between the Prime Minister's office and the Ministry of Corporate Affairs, and the Ministry of Corporate Affairs again engaged with the industry to understand their concerns, challenges and all that. And post that, I think last week they have released a set of 35 standards, which now are what would be the final standards that will get notified. But what they have not done is they have not announced the date from which these standards become effective. So they have left that open-ended. They have said will be announced at a later date. And the accompanying press release also says that the ministry will take into account the challenges faced by the industry, and accordingly the new deadline or the new roadmap would reflect the time that will be required by companies to make these changes, and will only again be done after the tax related issues are sorted out. So it looks like there is more time to get that done, and expectation is that it will be at least deferred by about a year or so. And so the ministry is then likely to come out with a new roadmap, which will then talk of when these standards get implemented. The other important thing is, I think while they've notified some of these standards, they've made some further deviations from IFRS, like especially I think some of the standards that impact infrastructure companies and let's say the large power companies, etc., have all been kind of deferred. The implementation date on those standards, although they have now been published, the implementation date of those standards has been further deferred than when the other standards come into place. So effectively, I think we can wait to see in the coming months how the taxation related changes come about, and accordingly we can expect to see a new roadmap from the ministry.